All right, happy President's Day. We are doing a little bonus session here, just talking through a couple of things you guys were interested in, sizing and stops. So there's a lot that goes into making these decisions. Most of the time, the options that I'm giving to you guys, I very rarely I trade a few of them, but I'm usually trading much closer to the price. Doesn't matter if it's going to move, it's going to move, but I usually try to leave alone those that I'm targeting for the group because I just don't want to be hitting a bunch of volume adding in there for competition that inflates the premiums. So otherwise, if it's something that hasn't moved and it's sitting there and I want to get it, I'll just wait and let you guys have first dibs on trying to buy something and then choose to get into that strike if that's the strike that I'm targeting. So that said, just in terms of the macro environment. So the key things that matter in terms of sizing. The very first thing is macro. What is happening with the macro environment? So if I'm looking at SPY or SPX or QQs, whatever, doesn't matter. Right? It doesn't really matter. You're watching the macro market, and when you have a statement made that we're looking for a certain level, right? That 605 60 being a key level. There were several things that had been discussed prior to that, and that is that you got to be ready and you got to be disciplined and you can't make mistakes, right? And I also had said, sell your wife and children and load up when you got your close above that 605.60. That can't be confused with intraday. If I'm trying to absolutely just completely rip the market, would be, on the day that it broke, it had broken several times, 605.60, a couple of times, 4 times, and it failed each time. And so when it broke and made the run to the initially it went to, I believe, 607. Right here, I think. 607 on the first 30-minute close. So I would always be watching that 30-minute close is where you're looking at. So here's your first 30-minute close above 605.60. Let's see, closed here at 60. Actually, it closed right here above. That may have been the second day. I think it was back here. Trying to find that first 605.60 right here. So this was the first close at 605.61 on the February 6th. Nope. This was the 13th, and then this is so it was here. So we had our first close, 605.60. Right here was a close above that 605.60. You're not seeing the chart. Oh, I picked the wrong chart, didn't I? Let's see, I'm back over here. Well, without data, I should be able to do this. Okay, there we go. 30-minute chart. There we go. Okay, so on the 13th, let's see, we closed here 607.81 and immediately failed. And then here on the 13th was the first close, then back above 605.60. Yeah, right here, 605.60. And I know that in that point, I was like, it's going to pull back. So I mean, people, you can make your own decision. I don't think it's going to fail. I think it's going to pull back. If I'm trying to squeeze every ounce out of a trade, then I'll sell my calls many times here, looking for a retest back in. And this was the day that you had the Trump talking to India, and I already knew the demeanor of the India. He was not going to be disruptive, and they were going to be very like-minded in what they said. So I knew there wasn't going to be anything really negative there other than the tariff talk, and they kind of just traded that discussion amongst themselves. So when you're trading, I'm looking to squeeze every ounce I can. So when this broke out and made that push up to that 607 and flashed above that, I said, if you want to take profits here, it's going to generally pull back. You could see it on the wicks, on the 1 minute wick and the 5 minute wick. And so it pulled back into the 605.60, but then closed back above. And then this was the next key one, right? So this was the next close, 30-minute close above 605.60. And it was game on from that. And it even had a wedge to boot off of that. So you had a closing wedge. This opened up the gates. So this comes into the thought process of, well, what my sizing? What sizing should I be? Well, this was the sell your wife and kids and be 100% in the market. I mean, I have half your portfolio, your whole portfolio. It really wouldn't matter because your stop is going to be right here. So it's not that far away. And that comes into understanding stop levels on a breakout. So once it breaks out, this becomes a stop because you have got a close here. This becomes a stop. So you're not that far away for any trades that you would want to enter. I say go for it and go big because you have a very defined stop sitting there. So I think the first thing is the macro. When I have the macro tailwind going, I have a lot more confidence then in taking larger positions on whatever I take. Now, the first thing that you should think about taking is the macro market, right? So I was so active on this. I was like, hey, I got the 605s. I've also got the 610s spinning out to Tuesday and going with 610s for Tuesday now since the markets are closed Monday. All of that was happening in this sequence because of what the structure of the market was showing. Okay. So I think that if you don't understand or now you do, well, then that's what you do. When you see this structure and you know that I've been just begging for this 605.60, and I said the market's going to absolutely explode above that 605.60 closing, then that's what you're looking for. The fact that it gave you a retest to load up again, that is absolutely just taking the market to school for this. You want to do that? You want to have a period of nothingness here, dead zone, to take premium away? Well, I don't fall for that. I'll get back in if you just keep it going. Now that you closed here, I'll go for it. But if you're not going to push it, I sold. I'm just going to wait. And we even bought 606, I believe, 606 puts. Yeah, we even bought 606 puts to make money on the downside. So it was the single best trading day in terms of technician of how to trade it that we've had in a long, long time. Okay. Absolutely nailed every aspect of this trade. Selling, taking puts, taking advantage of the puts, reloaded the puts and it came down again. I remember we did it twice and then I just got out of them. I'm like, that's it for that. Well, you got to listen to what's being said. Why would I get out of all of my puts? Why wouldn't you hold some of those puts as a hedge? Because the market's closed above 605.60 again. I don't want any more puts. And someone even asked me, are we going to take a, no, why would I take a hedge now? The markets have just signaled we're going to be making a push move. And so I think that you've got to understand this structure that we had been waiting for what, 2 weeks or so, 10 days to 2 weeks. And now you've got it. You've got to take advantage of that. It was the single best opportunity to go in huge on your account with very little stress on it, and very, very little downside movement after this second one, especially. You had no testing of your resolve to stay into the trade as we push towards. And I said that I thought we'd get 610, and we got 609.94. So, I mean, within 6 cents of that target, initial target there, and just absolutely nailed that. And so this is where the money is to be made big. So that's number one, is understand when the markets are behind your trades and trade big. So that's the first thing. The second thing, what is that? What are you sending a photo? You're just giving stuff. Okay. So the second thing then is, if I've got the market behind me and it's a key technical sizing, you go huge. You go extremely big. Okay. You go extremely big. Everything in this chart, if I look at this, and what I want you to see is not only that all this did was a liquidity grab back into a retest, right? Came back up to 606.20 and closed. So that's above 605.20 right there. It did another liquidity grab down and then came back up and closed all the way up here at 607.19. You should be saying, okay, he said 605.60 is it. It is the sell your everything and buy the markets. He said that. I see the close above it. I see the retrace down. That's basically a premium killing, is all this was, is an interlude using the Trump India garbage in order to pull this back. And what else are you going to pay attention to? On the pullback, how much selling's going on? Oh, nothing. 30 minutes of volume, nothing. Okay. And then what happened? The explosion move back out on volume. That's how you determine your sizing as well. Am I willing to stay in sizing if this had stayed at a level and this didn't move anywhere, right? If I'm like, I'm going big, I'm in. And all of a sudden you start seeing nothing but red, green, or something, like this, that's just starting, just dipping, holding. And it's like, well, I'm not making any money and I'm losing some money here. Well, that's what was happening here on the low volume. And then the explosion happened on the high volume. Okay. So you had double the volume in a 30-minute period on that breakout move of the wedge. These are things that you want to put in your notes. These are things that you want to pay attention to. So it's exactly on my mark. Okay. It did exactly what we were looking for here, that, you want to play that game. I said, oh, they want to play this game. Okay, fine. We'll take some puts. We'll take some 606 right at the money puts, and, we'll get out if it explodes up, but if it comes back, we're going to kill them. And we killed them. Okay. So we killed them. And then it went on double volume. So this is the time frame right here. This is where you should make your biggest money of the month, is these periods right here. Okay. The third thing on sizing then is the trims, right? When would I trim? Well, if you've gotten this candle to close and it's on this volume showing a breakout that is closed again, you don't want to trim this candle. Okay. It is high probability of making new highs and pushing. And so at the worst case, you would want to get a green candle that's pushing upwards here into a new high. And then if you want to say, well, I just want to make sure I don't get trapped. Okay, fine. When it gets above here on a green candle push, you could take a trim if you wanted to take a trim. And if you're in huge, you could take a trim. It's not a big deal. I didn't, because I was watching the sequence. I'm like, I think this thing's running 610. I'm watching for the push into 610 and sell as it's approaching, right? We don't ever wait for 610. We sell into it, and certainly 609.94 would qualify as almost 610, or selling into that number. And and you had a big volume candles pushing at the end. They were trading shares here between profit taking and bulls. Just kept pouring in. So the answer is, and the reason why we're trading so many more wedges now versus like right now, we're going to have futures are up what? Futures are up 1350. So futures are up 1350, which would put us at around the all-time high mark. Okay. So that's how we traded a lot of times as well. We still will, and we still do, is we trade off of these. But I trade a lot of wedges as well. And so what they do when you're trading a wedge is you have kind of this, I would put it from here in line with these wedges here. The algorithm basically is running it. And so when you have these wedges coming in and they break up, then you take the trade. If you didn't have anything, you take something, okay, as it's breaking the wedge, because compression, the closer that you are to here, the less your stop is going to impact your P&L, right? The less it's going to hurt you on that. And so keep that in mind when you're trading, is that the reason why the wedges are so effective is it allows you to even trade more aggressively, especially if the markets are going up and you're looking at a stock and it breaks, then allows you to be more bold. Okay. And so we did this with MRVL. We had a trigger on MRVL that was up in this 104 up to the 105 level, right? There was a trigger there. So I called it out to enter the trade here early, way before the technical signaled. Well, why would I do that? Well, as you guys know, this is my favorite pattern. Is when it was my top watch going into the day. If you look at the charts, it says it right here. I'm reading it, and it says MRVL top watch. It's right there. So it's not like there was a surprise. Anyone should be surprised here, but this was it. It says right here. It says MRVL top watch. Earnings March 5th, 109 calls with the gap at this level. And as a bonus, that is also the Model T zone of the last wave. 105.27 triggers entry. Okay. So 105.27 triggers entry. And then I gave the levels of where each level is going to go on that trade. But what I was also watching for on this stock was that Trixie move. Okay. Because I thought this was ready. It was already in this zone where it had the liquidity grab. When it opened up there again, and as soon as it came back and it touched, I just waited. As soon as it touched that reclaim here, that's when we went. Okay, that's when we went. Again, this would be a level then to where you would go big because your stop is really close. And we went out to February 28th, right? I think that was the calls that most people took. I said 105s, but you can go 110, 112s. I'm taking the 105s, but you can go. I also took some 110s as well. Okay. But my big trade was the 105s. Okay. Cause it costs more. It costs a lot more to do it. And so, 10 a.m. So right here at 10. Yeah. Right. As it was coming back, I didn't wait. Okay. that was an experience trade, like we did with Amazon. We've done it several times where we have a technical trigger, but because of the structure of the open, remember that Amazon trade where I was like, no, well, I'm going in now. We're not waiting. Okay. So, yeah. So I was loud, right? I was buying that and I was going through ding, 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 just getting everyone in the trade. And so that one, this is a period of time. Where else, when you're looking at structure of the trade, not only is this the stop, but this would be the stop, right? I mean, it's right there by it. And so you have a very condensed trade from your entry. Well, that's when I like to go big. Okay. I like to go big. And that's what these wedges allow you to do, is these wedges allow you to get in on a technical level and or experience level. And the experience level was I was watching volume at 2.1 or 2 times average volume during the same hour, okay, in the previous days. And I'm like, that's buy side volume. And it's very obvious that you could see that they were running it back up away from the short sellers and just absolutely crushed them, just trapped them and just crushed them. And so these are the wedges is the answer to really it's the big answer to the question. How do I know sizing? Well, if the markets are stagnant, sitting kind of, like SPY was that day, it was up. Okay. SPY, it opened at a high. It didn't trap per se. Okay. All it did is open and then just kind of went into this wedge down. There was no failure in there at all. And then it broke out of this wedge. And so all of that combined just to say, hey, if I see something like this and I'm up on a position, then I'm going to maybe take a little bit more off. I'll watch Model T of the wave here and see if it even made Model T. And if it doesn't, which it doesn't look like that did, then you read that as strength in the market, that they're not selling this off. They're not even hardly doing any pullback at all. I mean, all they did is a bullish looking wedge and didn't even come close to the last wave Model T, not even close before they broke it out. So this is one that I would be hunting for. What else can I jump in the market? What else is potentially moving, right? And so everything that I'm talking about all the time, that's how you determine your sizing. But I'm trying to get now where you have much more ability on your sizing based on the wedge, right? So you have this wedge right here. It actually, in the end of the day, had a break of structure. Okay. So you had the down move here. You had the break of structure. It then that's back in the structure of this, but then it broke structure to the downside. Okay. So if I'm drawing, well, I don't know where you draw this line, but it would have to come in, you're trying to keep a trend line. So it kind of came into there of this and it was narrowing down some, but once that doesn't matter as much as this. If I was going to put an alert on this, knowing that this was going to happen, it's about where we had it. Okay. Somewhere right in here. Okay. I had it a little bit higher, not knowing if this was going to happen. Right. I was like, hey, if this opens and it starts moving up, I was watching back this direction and found a technical zone. I think it was right here that I wanted to get above, and I had that as the trigger. Okay, I think that all of this is in line. I think it was in this zone. And so, yeah, it's somewhere in the 105, somewhere in there. And that wasn't based on a 30. I think it was based on an hourly that I used. But in this instance, we changed, right? We pivoted our trade. And what we did is we pivoted based on this reversal that happened, reclaiming, and we were like, we're going now. We're not waiting. Let's go. Okay, let's go. And that allowed us then to get nice trades. They moved 100% and then some again, right? They 100% and then they kept going. So depending on what strike that you bought, you would have had a trade. So how much of this would you keep over the weekend? Well, that's a good question. That's a question that each person has to determine. The markets did close. We're at all-time highs. So things tend to get bullish if we're going to push up. And certainly if we keep pushing this 13, 14, we're 14 and a quarter now on futures. So if we hold this level, then the odds are it breaks this 50 EMA, right? And then we're looking for this 108.82 initial gap fill here into this 110.50, somewhere into that zone. So earnings are coming up in March. Whether they pull this back to Model T Monday, that would be an area I would be watching. If you got out, I would be watching that on this sequence and go from there. So the wedges is really meant to help with your sizing, because on most of these wedges, if I do, let's take like a Microsoft, this random here. Okay. Well, we've obviously got a wedge on Microsoft, right? So we had this tight wedge right through here, and it broke above it. Okay. I probably would have had an alert somewhere right here, probably above all of this. So somewhere in the high close of this zone that gets you above all of this structure here, which basically would look then a pivot. I think you would get money starting to come in saying, it's leaving the station, right? So that would be an area to look at. But now let's see, since it came back down, I want to get really tight on this. So yeah, you had this structure here, which is super tight. You would have had to been sitting on Microsoft if you were going to take a late day trade, right? It would have been a situation to where, let's see what that looks like. Okay. So you have an imbalance. It came back, Model T of the imbalance period, fell back down with an imbalance down, which it took back out really quick, right? That probably, if I was watching this chart, would have caught my attention. Okay. That the bears are not in control because the bulls have just ripped through their last downtrend here. Okay. It came to a new low and they ripped it. So I would have been watching it right here on the 1 minute, which is why I like 1 minute trading. Okay. I like when I'm looking for an entry, I always scale as close down as I can. I'll go 30 seconds sometime because I'm reading the volume that's happening here. Okay. And I see during this, there was some acceleration, but there wasn't like huge acceleration. Okay. And then once it bottomed, it just kind of petered out into no volume, right? And even when they brought any volume, it was being bought. So once they take that imbalance back out, I'd be watching this one, right? So then it breaks outside the wedge. It retests fully. This is where if I was going to do a lotto and I was sitting on it, and these won't always happen, but if they do, that's where you would take your lotto. Okay. And then you would just get out if it broke back in right here. Just get out if it loses this. Okay. Make it be a perfect trade. Make it do what it's supposed to do to stay in on a lotto especially. But if this were on Monday and you saw this, then I would probably allow a double bottom almost on this to occur. Okay. Because again, you're very close. I mean, on a stock, it's a $400 stock, and that's less than $1. Come on, right? It's less than $1 on a $400 stock. If it's on a Monday, you wouldn't buy something like a 407 or 408 lotto. I don't know if there's a 407.50, whatever it would be. You'd want to be really close to the money if you're going to make this trade on a Friday afternoon late, right? You got to be right on it. I would say the 407 and just risk it then to here. So you're really close, and I would risk it. And then you would get just lucky. I mean, that's how I would read it. it took out the rest of the imbalance, and it took out all of the loss. So this is one that we should be watching, right? It should be on our watch list. We'll go outwards now, and we're going to take the last trend that we can get, which is right here, okay? So if I'm looking to get above that, I'm looking to my left for volumes, and where volumes died. So I'm looking here. So I'm going to come up on that candle, which is that candle right there. So the sell volume was dying down. I see this candle here was way up here. All these intraday candles, they weren't very interested in continuation. This one here. This one here. Okay, so I want to be above. If I'm watching this, I got to get outside of this, the down move here. So structurally, anywhere from right here up is where you're looking for an opportunity zone. Where can I find that beyond this break, right? Which is, if I'm really watching short term, would be right here, right? It just breaks back above on a 30-minute close above, and that's above all the structure then, a close above. But I want to be above this longer term trend. So anywhere from right there, just breaking outside of this angled line. And if I look to my left, I would at least want to get a 30-minute close above this level right here, a 30-minute close. So we didn't have a 30-minute close there. We did here that fell, but we're looking for a pivot opportunity, okay? So I'm going to go ahead and mark that because that's because that's really close for Monday. Okay, so 409.79, 30-minute close above 409.79. It starts looking really good. And then where would I look to say, you know what, not only is it looking good, but it's cleared the pivot of the resistance. So where is the pivot? Well, there's two of them. The first one, this is above, which is this action here. The pivot from here to here, this is the midline, okay? So it pivots above anywhere right here, but certainly by here, you pivot above almost the entire structure. All that's left is this little and that little. But then I'm watching this, and where is the pivot here? So I've got to find on top of the majority of where what I would have called true resistance, okay? Not the spike moves, but true resistance is somewhere right there. I could draw that down actually. So a 30-minute close above right here, that's the highest closing candle. Okay. These are the flash moves that trapped, okay, flashed out and just fell back slowly and then back down underneath. So you obviously want to get a trim on the breakout move, but the difference between these is the wedge, the maturing of the wedge, right? So now you have this right here coming up. And so right here, this candle right here, low close 405.88, a close below 405.88, I would be out of this trade. I would just go ahead and get out on a 30-minute close below it. If it's really falling hard and it takes out this low, don't wait for 30 minutes. Just get out. Make this a hard stop. Make this your clock start for a stop. And obviously, if it reclaims it immediately, then you just hang with the trade and you wait and see, because it's getting super tight right now. Things are getting really tight. But that would be your stop. So from here to here, again, on a $400 stock, that is about $4. That's about $4. Well, if you're going to trade the big stocks, you're going to have to give it some room on the move. And so that's $4 that you're going to be risking of a down move impacting your options, which is why, if you do a weekly, you're going to have to make a decision. If I don't get a trim and it collapses back under and closes on a 30 below 409.79, do I want to keep it? Well, that's when things like intraday, right? When I'm watching the 1 minute, did it hold its opening low, right? Let's say this is a Monday and you made the decision and you get in and this came back down and it came all the way back down to here, let's say. And then it came back up here to close. It's still below there, but it never tested the daily low, okay, the intraday low. I would hold that. I would stick with the trade in that scenario for the week on a Monday, for example. So that goes into sizing as well. If we're going to trade a weekly, right? So if a trade's called out and it's like, hey, I'm taking XYZ weekly calls, then what day is it? That falls into sizing. So if it's on a Monday, I'll probably size heavier. Instead of 30, 50, I'll go with 50 of them. Okay. Otherwise, it's pretty typical 30. If I don't have the macro market behind me, then it'll be 30 no matter what I think of the stock. Okay. No matter what I think of the chart, the setup, I'm not going to go risking against the macro headwinds. Okay. Just not willing to do that. So again, you always are mindful of the macro market. Is it just going static right now? Because when the macro markets are just sideways and chop even, there's certain stocks that are going to run. Yeah, I want to find those stocks, right? So you're hunting for those stocks. And that's where these wedges can be your big advantage over the markets. XYZ. Okay, this is one of our setups for the week because on the daily, you have a wedge down and they have earnings and it broke outside of the wedge. Okay, right? So if I go to the 30, okay, and I'd refine this then, let me get rid of all of these. You want to have 3 points of touching along the way and leave the anomaly out. Okay. Leave, especially if it's in the open. That's an opening trap move. Okay. So on a 30-minute chart, just ignore that and come back in where your body, your touch points are in presenting this. So it broke structure here. Hey, you're outside. This almost looks like a chart we would say, hey, our old style trading, right? Your old school trading, which is, hey, I see this. I see it dip back down into a new low. Forget about all of the rest of it. Just pay attention to that structure. Okay. And it's when we see this turning around, it went above Model T by a pretty good measure, actually. Model T somewhere in here. So it went way above it. And then it fell back down and it hit a new low. This would be like we always like to draw, right? And so if you're watching this sequence here, you're outside of the, wish I had seen this Friday now, right? But I'm already in XYZ. I think a lot of us are. But if you had seen this sequence on Friday, it would have been a buy, right? Because, okay, we just hit a new low that reclaimed. As soon as it reclaims this level right here, much like MRVL, I go ahead and take the trade because I can't get him. I mean, you can't get much more compressed than that right there on a trade. So you go ahead and take the entry and you would have gotten a trim for your trouble probably. Yeah, definitely. Because that's a 82, 83, that's $1.50 move. So if you take like an 85 call for this next Friday or a 90 for earnings, you probably would have gotten a trim or you just take the money off. But now what we're looking for is this breakout move, right? So from a structure standpoint, this right here, 84.29, we need to be watching that, okay? Because that pivots. That pivots from this down action. It broke it. It fell back down. So we need to be paying attention to this zone. I would adjust it up right now to 84.37 based on that last candle. Okay, so 84.37, that starts looking really good. on here because of the structure. Okay, you're out. And so where would my stop be on this structure? Well, if I'm trying to do an earnings trade, my stop on this structure would be right here. And that is when they swung it Trixie low that ran to highs of the day. Okay, then I would make this my stop. Okay, so that's your trade stop on this. So if you took March 21st calls or whatever, just to trade earnings, this is your stop. Your goal would be to get a nice breakout move back to Model T. Okay, so if this breaks above here, that's a pivot right here. Okay, that's a pivot zone right here. I mean, you can see it clear as day. And so above there, that's when you start looking for Model T. Okay, that's when 87.64. So I would think minimally before earnings comes, we're going to see 87.64 on SQ. We can see above it. I just think we will see that. And so what are you doing? Well, obviously, if you're making a trade on this level and then it breaks, it holds on here for a 30-minute close above, which it has not done since here, has not closed 30 minutes above 84.37. If it does, then you're looking for at least an initial push to get yourself a trim so that you can't lose on the trade if you get stopped out as best possible. Okay. But you're targeting all your action 87.64. If you're a large trader, what you would want to do is when 7 p.m. comes tonight, if the futures are still green, is you want how many shares do I want to make a put call strategy here. So I want 5,000 shares. When it comes to here, I'm going to sell 2,000 of them, and then I'm going to do a put call strategy on 3,000 of them. So I will make $8,000 on this trade on the shares. Obviously, I'll be up on the other 3,000, $12,000. But what am I doing? I'm not going into earnings with that. I don't know if it'll push higher or not. Doesn't matter. I'm going to take a put call strategy here, and I'm going to do the same thing I did with Roku, and that is I'm going to buy a 100 call. Okay, going to buy a 100 call, and if I get up there, that allows me to sell all of my shares out and have that covered call taken care of. And in terms of if it goes to 120, then I can get them at 100 to pay for the half of them that I would need for the covered call that was entered. Okay, so if you sell the shares, you better have the ability to buy the shares back at least at where you sold them, or else you can get yourself in trouble really quick. So no naked calls on earnings, that's for sure. Okay, so that would be the setup. So these wedges help you do this. This is why we're trading more and more wedges, and it was timely because when the markets are moving upwards, the wedge trades are much higher percentage to get at least a push. Do you realize that most of the trades that we're doing, you're not even exposing your capital for that long. When they break that wedge, you take an MRVL, when they break that wedge, your exposure of capital would have been just right here for a lot of people. That's it. You just get your money back and you're like, oh, well, that's it. I got a wedge break. What if it goes up? Okay, whatever. You made 100%. What are you? What kind of a trader are you? Are you trying to build your account safely? There'll always be another wedge trade. So why don't you just trade the wedge? Okay. Why don't you just do that and not worry about whether it's going to go to 110, 112, 50. Just build your account with 100% ROIs out of these wedge moves. Because it doesn't take much movement to get the big ROI, and that's why they're so successful. So yes, you'll get one out. We've got one here, this wedge here. I'm sure that was absolutely a thing of beauty on the 10th. In fact, we traded this. I remember trading that. That was our big gainer on Marvel the last time, MRVL the last time. Okay. So again, it came out of the wedge. It came back down. You go ahead and enter. If you didn't enter on the break, when you comes back and retest and you see that liquidity grab there see those two? There's two of them right there. Okay. Then go ahead and enter the trade. And guess what? Your stop is a 30-minute close below right here because this didn't. Okay. So you take the last 30-minute close, and if you close below that, I even had it marked there, it looks like. Yep, that's right on the closing number. So we had that marked as I can get rid of that now. But at any rate, you load up, and then you just stay with the trade. And I don't know if that would have given a trim, probably would have given it. But then you get the nice move. And look how much Model T from here to here it did. From here to here it did. So it was shaking, right? This is how algorithms get rid of you. Okay. Well, if I'm just trading the wedge trade, then I'm going to be out anyway at 100% ROI and not risk any, whether this fails or goes, I'm not going to risk it. Maybe keep one runner. And then you would have made really good money on the one runner. But the wedge trades should be giving everyone a big shot of confidence, okay, in terms of your ability to come in sizing. What you have to do is be disciplined on your stop then, okay, which we're looking at that. Is how do I know the size, and then how do I know where my stop is? Well, wedges get you close to your stops, 30 minutes. Okay, these are 30-minute wedges for the most part. Now, sometimes we're going to be using an hourly wedge. Okay, so sometimes these wedges are going to be hourly, and that's what this one was for this trade, actually, because I had it right here back in through this zone here, right here. I wanted this all the way back through. That's why I had it at 105. I was targeting this right here. And I think we had ended up adjusting it to 104 something, because I said, hey guys, this is going to break that 104.90 something. I think is what we were looking at. And if it breaks that, and it traps on it, just watch for then the continuation. And that's exactly what it did. Okay. It broke it, pulled back, and then just kept pushing on the day. But at any rate, on the hourly, you're still very close. With a low close on the 30-minute, just get out. That would have been right here. So 102.38, that would be your stop. And there you go. All right, any questions on that? Yeah, 104.94, exactly. So what we had is a 104.94. 104.94. Okay, so we had a 104.94. It flashed above it, came back down to respect this technical right here. Okay, so it kind of respected it, broke above just like SPY did. And this is what you guys look for. Okay, it broke above. And then it came back all the way down and retested again. This is where the stops come in, is if this fails, then this is going to eventually become a stop if it fails, okay? Now, it has to completely fail through your stop, okay? Boom. Otherwise, if it's a Model T of this wave, okay, which I don't think that would have taken you below your stop, somewhere here, right there to here. You would have been above your stop right here, okay? And it also would have been a full retest of our larger trend line that we had drawn, by the way, okay? Would have been a full test if it had come back all the way to here. Sometimes intraday stocks make crazy moves, right? It depends on if they think there's too many tag-alongs or not. If they don't think there's that many, then it came back and it retested, came below this 104.94, proving that we were right in our technical analysis. Okay, that this in fact was a good adjustment to move this down, and then it broke back above. It came back, looks like a Model T almost perfectly. I bet within a nickel, free lunch, high, low. I bet it's within a nickel. Okay. And then off it went on up. Okay. When you know the technicals, I'm doing the heavy lifting for you guys. I'm giving you these. Okay. When you know them, all what you have to do is then learn why and what am I doing with those? What does it mean? What should I look for? Okay. Well, you should look for these things. Okay. On SPY, you should look for this, right? 605.60. 605.60 breaks, runs up. I see the wedge down. Okay. Just a wedge. You're doing all this. You should do it yourself. I don't need to do it. Got Model T. It literally came and touched Model T. I mean, everything that I train is how the answer to your questions. There's nothing I'm hiding here. I'm giving you the keys to the kingdom. You just have to be willing to learn to pay attention to them. Okay. So you didn't even need a 30-minute candle on SPY. All you needed was your eyes on a 1-minute candle. And with the second that this topped, if I go, you know what, guys, I'm going to, if you want to take money off here, it's a good time, because I think it's going to pull back, because there was one, it's gone now, but it flashed it. There was a technical there. I'm like, hey, if you want to take your money, then take your money here and watch this pullback. Okay. And then I'm watching the 30-minute and the 1-minute, right? Obviously. But it comes on this wedge all the way down and it touches. I mean, this is like heaven sent, right? Okay. I see so many things here. I see the W. I see that W. I see a block order right here. Look at this liquidity grab. They shook it, and I see that block order. That's a block order whenever you see these, okay? That's a block order. So they shook the heck out of this at this point early on, which is an indication that we're going to go. And I think we were even starting to talk about it. I'm feeling good about this, right? We were warming up. I was like, oh, I'm feeling good about this, guys. I think this is it. I think it's going to happen. I think today's the day, right? So I was getting pretty animated, because I was pretty excited about that in an unemotional way. I kept saying, you keep your emotions in check, but I was pretty excited because I knew that we had a lot of people in the 610s already, and so I knew that we were going to get the at least the push test. I didn't know if it was going to hold until I saw that first 30-minute hold up here, and then I was like, now we're just in a retest. Once you get that 30-minute candle close, your mind then should shift. So put that in your notes. Once you get a close above your technical on the 30 minutes, then your mindset should shift to anything I'm watching downturn. I'm going to be watching Model T. I'm going to be watching the wedges. I'm going to be watching the volume. Are they selling the heck out of this? No, there was hardly any. We were all complaining about the lack of volume. There was nothing during this. And then all they did is brought some volume to exacerbate, to make it look like things were really going south, and then popped it. Okay. No, I don't either. I don't think it's coincidence. It's an algorithm. Okay. It's an algorithm. And so very good eyes, Manuel. Bonus to you. Manuel's talking about this right here. He doesn't think that it's coincidence that this was resistance multiple times that then became the Model T support once resistance is broken. So you get multiple levels of resistance retested in a sequence, even on a 1-minute chart. It's not like it's going up and just one. Look at the fib also, by the way. Look at the fibs working for you. Boom to that fib, boom to that fib, boom to that fib, boom back to this fib. Guys, this was like the golden child of easiness in my world. Okay. It's just all of these things just jumping out at you. Right. So, but Manuel, that's a very good observation, right? I see that resistance and I see it now become support. So what would I do here? I would add, I would come back in huge. Okay. Why? Well, because if this fails below that liquidity grab, then certainly all of the liquidity that was there is now gone and they're likely going to run this down. It's probably going to fail. So this is structure 101. It's like the perfect example of what we talk about all the time. Okay. So learn it. But when I've preached a key technical level over and over again of what we were looking for, that's the answer. That is when you should really be going in huge. Yes, it's recording. Yes, it's recording. Okay. And then if you notice, it went to an ATR fib way up here. Okay. That's an ATR fib all the way outside of the normal range. So they went outside of the normal range, squeezed it. Okay. And if you had a target on the squeezed fib, it would have been into the next day, by the way. So this was there, right? So you would have had this to look for. Hey, if I see this coming and it flashes above it, I'm gonna probably take money here. I'm gonna see if I can get it. Number one, but when I get this ATR fib a flash above, I'm gonna take it and then I'm just gonna watch it. Okay, and it just played around. So now I think it's above it right now with the futures, barely. Not much. So we'll have to watch it. They're ranging from 12 to 1450. They're 1275 right now. So you have a wedge down into the close. Okay. You know this resistance, so we might as well put it here, right? 610.56, true resistance. Okay. Let's get rid of now all of the moves here. And then what would our plan be here? Oh, nope. Get rid of that. Our plan here for Monday, you go into every day. You should have a trading plan. Okay. You should be thinking of a trading plan. Okay. So I'm going to take this area here and I'm going to use this as my initial Model T on this wave. Because if the markets are going up, they probably don't want to run it hard down now. They've already done all the work. It's broken out. And so maybe a retest to the 605.60 could happen. Okay. All the way back down here wouldn't be ideal, but it could theoretically happen. But 607.99 is Model T. So when I'm walking in, I have not really looked at this for Monday or tomorrow yet. I do it during the night, but I'm doing it right now live. Okay. Of how I think through my day. And what I'm thinking right now is, okay, I see positive. I don't see any major news events that are going to derail this, that it's already out there. So it's climbing a wall of worry. For any of the worry that's out there, we're already climbing it. So I'm just thinking in my head through the day, what do I expect to see? I've got two wedges down. Okay. I got resistance level here that obviously we are going to have to clear for me to have confidence in the market for a squeeze continuation now on the breakout move. And so that would then look like these level to level. They haven't been huge runs. Okay. They have not been. They've been this level. I'm going to eliminate this to this level. Okay. Long sideways period on these levels. Okay. And then this level now, almost like watching IoT, right? So now, right now, we don't have anything new yet. So what we're looking for is this structure here. Okay. This is really nice structure, to break out and now give us a move. That's like, just give me another move up Okay, just give me above up here 614, 615, something like that. That tells me trend is continuing now on the macros. And so now I can start really honoring the 20, 50, and maybe not so much the 9, but certainly the 20 and the 50. I can honor that more. Then I'm going to go to the weekly. And so in my head, I'm planning on a move up. This is like I see it, a wedge breakout, not 30 minutes, but 1 week, 7 days, 21 days. I've got to break out. My high close was 607.97. I've got to close at 609.70. I closed above the high. Okay. This high here, 607.81. I closed above that high. So I'm at all-time high close on Friday. That's factoring into my mind right now, right? I'm looking for inside-outside bars. I really don't see much in the form of structure here on this. Looks like there may have been one here. I don't think that's an outside bar. Maybe it is. The high was 599.70, 599.36. Nope, no outside bar. You did have an outside bar here, okay, to this week. So outside bar to this. So that makes the high 599.70. A break above 599.70, a close above is very bullish in its lean. It already did it once, did it twice, did it 3 times, and then broke and now closed at all-time highs there. Okay, all-time high close. Then I'm going to go to monthly. I do this every night, by the way, but especially over the weekend. Come in a weekend, I'm really watching. Okay, we have an outside bar, 609.07. This is 610.78. 609.07 high, 610.78. Low, okay, 580.91. Low here, 575.35. Okay, so last week the high here was 610.78, 610.99. So we broke outside of this outside bar. Okay, was this the outside bar? Let's see, high 609.07. Yes, this is an outside bar to this month. Okay, so in terms of momentum, what do you think? Okay, even when I look at this, what is, someone do the Model T, please. The high was 610.78. Someone add 610.78 to 575.35. And what is the monthly Model T? Give that to me, someone. 575.35 plus 610.78. 593.07. So for an entire month so far of February, the low here was 590.49, and let's see, what was the low was 590.49, and Model T of the month is 593.07. Okay, 593.07. So it flashed below the monthly, the previous month Model T, okay, and it reclaimed then, and now it's pushed up. We never went below the body of the candle, this body here, okay, something else that you want to pay attention to. So all of the structure right now is suggesting something like this, right? Is a breakout, just a push now continuation. We've got the 9 on the monthly to use that, to keep an eye on. Breaks below, hey, we got to watch that low, make sure it doesn't break and change the dynamics of our structure, right? But otherwise, right now, my plan for Monday is to look for opportunities. And once I see confirmation of the market post imbalance period and it's holding and or pushing, is to make trades, right? is to take any of those trades that we've got outlined, to start thinking about how can I take advantage of this period for earnings trades that I want to be trading. So that's your mindset then. So that's how I'm thinking right now, and this is the genesis of it, right? I haven't come up with my plan, but this is how I think through the plan. Is you just look and you say, what is the market telling us based on structure? Okay. So I also then I'm going to look at monthly. I want to see volume. So far this month, there's no volume. Well, that tells us a lot. There's not a lot of bullish activity in terms of buys, but they're defending the lows, right? Because there's not much selling going on. You may think it is. It's not there, right? Put it in writing. Model T on low 213 and high 607.49. So put it down here. Okay. There you go. All right. So I'm going to look at volume too, right? When do I want to see now volume coming in? Okay. Well, they managed to hold this up above the entire month, and we're over halfway through the month, and we're not halfway on volume. What typically am I looking for on these breakout moves? Okay. Whether it's a wedge breakout move on a monthly chart, you trade it, you pay attention to it. Works the same. It gives you a macro feel, right? So I'm sitting here going, okay, I see this coming, and then I see the volume rejection. They sold it with increased volume, but they got rejected and trapped on that volume. And then the volume came back up above here and pushed up. So the bulls are still in town. The bulls are still in charge. You're keeping track of your fibs as you're going through, even on the monthly, and voila, like Manuel said, hey, I see that resistance here, and guess what? I'm telling you guys, you give me volume and the Model T, and you should be able to beat any trader in the world. Okay? I firmly believe I could beat any trader in the world if they get to pick two things, I get to pick two things. It's not disclosed to each other what it's going to be. Those are the two things I'm going to take. Okay? Because I can see the fib. I don't need it, right? I can see it without having to actually do it. And I can do the math if I needed to. But anyway, is that not amazing? Is this not that's a monthly chart? And if that doesn't just blow your mind, then I don't know what else to tell you. So that's just amazing. But that's why you watch those things, okay? And so now you have this big push trade, and you could see when they broke it out, when they decided to start getting serious on this, okay, this volume was kind of the precursor to the start of the move. And it came back in and it retested, by the way, just like a minute chart, just like a 30-minute chart. It came back in and tested the breakout. Is that not crazy too, right? On a monthly, this is three months of retest coming back down. All right. It's just amazing. Okay. But what would you pay attention to? Oh, that didn't come close to Model T. That didn't come close. They're about to get real on this. Okay. Right. That's what you tell yourself. Got close, didn't touch it. So anything that stays above it, doesn't even test it, read that as strength. Okay. And so that would have been read as strength. It rejected it, and then it never looked back. Okay. So you're paying attention to these things on the macro level all the time. And that helps you with your longer term planning, which is why I keep saying I think the markets are going higher. I mean, I keep saying that my lean is that the bias is higher. When it hit this, I was like, my bias is neutral. The structure's still there to the bull side, but I'm sorry, there was an outside bar, I believe, on one of these, and I was like, I've got to at least control myself and not get ahead of my skis on this market right now until I see confirmation. So you still haven't got confirmation. All you have is a new high. We're waiting for the breakout move now to break out of similar structure, right? And to get above this structure, above it. Let's go. Let's give me another trend move now. Okay. And then we'll trade that. All right. That right there, and that all of that feeds into your sizing, right? I come in with a plan every day. I'll come up with my is it going to be a chop day? The markets ran 100 SPX points. My first instinct is going to be you got to be careful of an opening. If it opens upwards, I got to be careful of trap. If it draws down in the pre-market overnight, it's drawn down and it comes back up through, I'm thinking upside, continuation candle. If it comes to Model T, I'm probably a buyer of the previous day. I'm probably a buyer. If we've been in a move upwards, I'm probably a buyer at Model T, and I'm probably going to be selling into a retest of the highs, though, not knowing. And if it becomes a chop day, which is in likelihood what the majority of them do, because there's not that many days that are mode 1 days, maybe about 15 to 18 a year, mode 1 days. And that's why you have to take advantage of them when you got them. So the rest of the time, you're just watching. You come into the day with your thought process. I think it's going to be a chop day. Markets went way up. I think it's going to be a chop day. So I'm not going to be really anxious to be taking a bunch of trades. In fact, I'm more interested in maybe selling naked calls for premium and see if I do get a chop. Because even if it's going to break out, maybe it goes to Model T, and I can then bank a good portion. You saw me do that several times during our waiting too. At least once that I remember that I did. I sold naked calls against SPY, and then it did hit Model T, and I just went ahead and exited at that point. And it did keep going lower, but hey, if you're trading, you want the meat trade. I want the money that I was looking for, and my trade worked, so I'm taking the money on there versus risking a big candle shot that then even if I get out, it's too late. You've lost your money. So go ahead and trade the technical is my point. Okay. So hope this helped. I'm done. I'm hungry. It's day off. Susan's off. We're going to do something. I don't know what, but I'll put this in the recording and look forward to seeing you guys in the morning. What you need to do is study the charts of the setups that I've given, look at them, and take into consideration everything that I've just gone through and come up with your observations and maybe come up with some observations on that. Say, hey, I'm looking at that. Let's see. I'm looking at that BST trade, and I spotted this as well that you need to be mindful of. Okay, yeah. Well, I thought about that, and so it's a good thing. Or I didn't recognize that. Thanks. Right. So go through these trades and see what you see that is not marked at this point. That may be very important. It's a volume spike. It's a liquidity grab. It's a resistance or former resistance that became support. Anything like that you see on these trades, that becomes part of then your thought process in your planning, okay, of how you're going to trade this. And that's how then you know how to size and you know how much risk that you're willing to take on the trade in terms of, I see that resistance got broken. So certainly that is just above where he has a stop. I'm really going to pay attention to any drawdowns below that to see if they become liquidity grabs that reconfirms that resistance has now become support. These are all the things you do, and I would do it on about 4 or 5 stocks and then have your favorite one. And that's like MRVL was my favorite one going into the day. Okay. for all of those reasons. You were near the lows, the previous lows support that had a liquidity grab. So we were watching that. We had the wedge trade. We had resistance that was going to get broken if it did come back to watch for. There was just a number of things in there, and then volume became part of it. Okay, so I was watching the 5-minute and the 15 volume. And when I saw the 5-minute volume double the previous day's 5-minute, I was like, that's it. To me, that was it. So those are things that you're going to look for, but y'all go through those trades and come up with things that you see, observe, and iron sharpens iron. You'll help each other be that much more effective tomorrow when the war starts. All right. Have a great day.